Everyone watched the headlines this week scream about war and inflation. The bond market was listening for something quieter, and that quiet signal just pushed mortgage rates to their lowest point in more than a week. That's good news for you and your family. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of June 12th, 2026. Let's start with the big story. For months now, the markets have been playing a game of deal or no deal over the war with Iran. Some weeks we win, some weeks we lose. This week, after a lot of back and forth, everyone won. A peace deal looks close, with an agreement on the table that would reopen a key shipping lane for oil. Nothing is signed yet, so call it real progress, not a done deal. But the markets are already moving on the hope. Oil has dropped to about $84 a barrel, down from a peak of $117 back in April. Cheaper oil takes pressure off inflation, and that gives rates room to ease. Here's where it gets interesting for your household. The inflation reports this week look scary on the surface. Prices are up 4.2% over the past year, the highest in 3 years. Wholesale prices jumped 1.1% in a single month. But look one layer down. Almost all of that jump came from oil. Take out food and energy, and the rest was calm. So the scary headline is mostly an energy story, and an energy story can fade fast if the war winds down. So what does this mean for you? It means the headline and the real trend are telling two different stories, and this week, the real trend worked in your favor. Mortgage rates dropped to their lowest level in more than a week. Housing is showing signs of life too. Existing home sales just hit a 5-month high as affordability improved, and even refinance demand bounced higher. If you or someone you love has been sitting on the sidelines, this is a window worth watching. A quick word on the bigger picture. Strategy beats rate always. For your family, a clear plan will always matter more than a single headline or any single day's rate. Now this week's mortgage rates. The 30-year conventional is 6.58%. The 30-year jumbo 6.84%. The 30-year FHA 6.14%. And the 30-year VA is 6.16%. These are national averages from Mortgage News Daily, not an offer to lend. The 10-year Treasury is sitting near 4.48%, down from about 4.53% a week ago. I also want to point you to a couple of featured items this week. The first is $400 a month with no plan is $48,000 gone in 10 years. Do the math. The second is the Fed just killed your rate cut plan. Here's the math on waiting versus acting. There are several more waiting for you as well. You'll find them on the right side of the page or below the video, depending on the device you're using. I also want to share one of our financial illustrators with you. Today, it is the rate reduction illustrator. You simply enter your current mortgage rate, your current interest rate, and the rate you would like to reach. The tool then shows you exactly what it takes to get from where you are to where you want to be. It turns a vague wish into a clear plan. If you'd like access to our complimentary Illustrator suite, just ask. Key Steps, one more free resource for your family. Key Steps is a free platform with credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps to put it in work for your household. The economic calendar preview next week is a big one. Wednesday morning brings retail sales. Then Wednesday afternoon is the main event, the Federal Reserve decision. Markets expect no change to rates, but is the first meeting for the new Fed chair, Kevin Warsh. So every word will be watched closely, and on Friday, the bond market is closed for the Juneteenth holiday. That is your weekend update. We appreciate you listening. We'll speak to you again next week.